Hello, everyone, and welcome to the HUBB Live Trading Room. Great to be back with you all during this trading day and during trading hours. I'm a big fan of this new format of having it on Wednesdays with more content and material for us to cover. First and foremost, we do have to cover our disclosure disclaimer agreement. Main thing to take away from this is that we are not licensed investment advisors in the United States, so nothing is to be taken as personal investment advice. This is always available on our website, so please feel free to read it in detail at your leisure there. Other than that, happy Liberation Day to everyone. As Rob said in his commentary last night, it's been a volatile day, but likely not as people might have expected this far. So let's see what Rob has to say about that now. Rob, you out there?
I am, Zach. Happy Wednesday afternoon to you. Welcome, everyone, to the HUBB Live Trading Room. And happy Liberation Day to you, Zach. That's what President Trump named today. We thought we were going to get details on the tariffs, but now we've been told it's not going to be till 4 p.m. So market shook that off from a downward open. I'll show you a 3-minute chart so that you can see exactly what's happened. I did say in a commentary posted on the website last night that I had no idea, nor does anyone else, how today might end, but I did expect intraday volatility. Volatility to the upside is probably not what everyone was thinking was going to occur today. So you can see that basically the open was the low of the day, and we've just rallied since then. So let's condense the chart here and see if we can find a little bit of a Ellie wave intraday pattern, and we're in a wave 3 right now. So perhaps some sort of a pullback in the next hour or so. We'll see. We'll update this again before we go, and then maybe further rally into the close. But a nice long intraday wave 3. I'm drawing this zigzag here. I've been doing a bit of day trading myself. Don't advocate day trading, but I know a lot of you do it because you send me messages, and I just want to help if you're going to do that. To utilize the best tools that you have, and having intraday Elliott wave is a great help. All the rules that we talk about with Elliott wave in general, etc., all apply no matter what time frame. As you know, I look at a 3-minute chart. So this is the chart of where we are right now. Sorry, I had to let a cat out of the closet. I was wondering what that noise was. We're kind of topping out right here. Maybe this is the end of the wave 3, or perhaps the wave 3 extends to this 100% level on the intraday zigzag. I'm already out of the trade that I did this morning. So maybe we go higher from here, but I don't think anyone expected a big up day today. That's the part of the volatility that I didn't think people might be looking for. But we don't know what's going to happen at 4 p.m. So maybe tomorrow we turn back. But as far as where we are right now, we are higher on the day. As you saw from the intraday chart, we're above the 10-day moving average, which is big because we got oversold following Friday's big downward move that we had. We got oversold on Monday morning. We opened right below the A-wave impulse on the downward zigzag. By the time we hit the low pretty early in the trading day, there was real separation from the 10-day moving average. So we've corrected that. We went back up, closed near the high of the day on Monday, closed higher yesterday, although slightly. But we're up quite a bit right now. And if we close above the 10-day moving average, that will be significant. But with the tariffs not being announced till after the market closes, it makes you wonder what's coming, what's going to be said. Is there something going to be said that wasn't expected? Interesting that it's not going to be done during market hours, and that they picked the administration, meaning they, after the market closed today, to announce it. So perhaps we'll have another volatile day in tomorrow's session. But if you're wondering, well, with this upward move today, again, Monday and Tuesday didn't matter because we were oversold. But today matters if we get back above the 10-day moving average. And you may wonder, well, does this downward zigzag still apply. And it does. The two steps that we want to look at, which I did post in the commentary last night, the first thing that needs to happen is that we break above this resistance level at 570. If we can break above 570, then we have to look at maybe we are going to go and test this B wave, and perhaps this downward zigzag can become disqualified. But we've got a lot of work to do between now and then. First steps first. Do we close above the 10-day moving average at the end of the day today? Secondly, based on tomorrow's trade, can we get back above 570? And then if we do that, you would think we are likely going to at least test this B wave, if not maybe take it out. And at that point, the pattern can become disqualified. But based on the rules, this pattern is still intact until this B wave is taken out. Now, even if the B wave moves, that's a different zigzag than where we're in right now. So we can reevaluate if we move higher. As you know, we can stay in a zigzag with a movement in the B wave all the way up to 61.8%. And it would still keep this downward zigzag in play. So we're not out of the woods yet on this potential downward zigzag playing out. But those are the key levels to watch for. So once again, to review, number one, do we close above the 10-day moving average? Second one is, do we break this resistance at 570? And then if we do, undoubtedly, we're going to at least test this B wave high. Does that hold? Or do we start a new zigzag with a potentially higher B wave? So if you're wondering, well, can all of this end? There are some talking heads on the financial networks that are viewing this low on Monday as a test of the low that was set back here in March, and that we're good to go, that we've put in a double bottom, and that we're going to move higher. And that is a possibility. There's three ways that the market doubles. I don't think I've talked to you about this before, so I thought this would be a good opportunity to go through that. The first way that a bottom is tested is you go exactly to the low, which means that we would have gone right to this A wave low, which means the open on Monday would have been the low of the day. But we did trade lower than that early before we started the rally on Monday. The second way is just like this, where you take out that low and everybody starts to panic. I've talked so many times about head fakes that the market gives, and the importance of having the follow through or confirmation day. That you trade below that, everybody panics. And that really did set the stage for Monday's rally, the fact that we traded below this low. So a lot of people went short, a lot of longs bailed, and then the market rallies. And that's how things usually work. The third way that a market can test a bottom is the low comes down slightly higher than where that actual point is. So it makes sense, right? You test a bottom by going exactly to the point, slightly below it, or you stay slightly above it. I'm using a downward reference here. It would just be the same thing if it was an upward move, the same three ways of testing a bottom. So there is a potential that this zigzag becomes disqualified. We're just not there yet. So as long as this zigzag is still qualified, and again, a lot of work to do to disqualify it, especially since we're not going to get the information before the market closes today that we thought we were going to get, we have to wait and see what tomorrow brings now. So when we talk tomorrow night in the insiders meeting, we'll have more information. We'll have Thursday's closing price. So I agree with Zach. I really love the spacing out that we have now, where we do the HUBB Live Show on Monday at 1 o'clock. So we have a little more data to talk about then. We have Trade Finder on Tuesday. Now we have the HUBB Live Show here on Wednesday, and the insiders meeting Thursday night, and then Fridays we record the U.S. market update. So basically, we have the ability to reach out and touch you on every single day of the week, and that's what we want, and give you opportunities to make comments, etc. So that's where we are right now. The market is still moving to the upside. So we'll look at the intraday chart before we wrap things up. Today, just a couple things before we get to the AI, which is what this show is mainly about. I did want to show you the bond market because that's really interesting right now. You can see volatility in the bond market today. Look at the size of this bar on the TLT. Really wild that we opened at the high of the day. It was at a little resistance from those highs on the beginning of March. So 1 month later, we're right back at the same level. But look, we're trading currently at the low of the day and the TLT. Remember, this is prices, so yields are moving in the opposite direction. So with prices up, yields open lower, but yields have increased. We did have some positive PMI data that came out this morning that showed things are not too bad. It's pretty much what we've been discussing. The economy is weakening. Inflation is staying stubbornly high, but not really increasing. It's just not decreasing at the rate that the Fed would want. And we had the JOLTS report yesterday. So I just feel like the Fed is still on pause. I think they're out of the picture for at least till June. That would be the earliest to consider any sort of a cut. And I think we're going to need worsening data than what we have so far to see them. I think they're pretty content with where things are right now. But really interesting that yields have pretty much been creeping higher since the market opened today. We'll see how that plays in. It hasn't stopped the market from rallying so far, but we'll see how that works out through the rest of the day today. And specifically now, we have to wait till tomorrow. Looking at the VIX has come back down. We're down back below 22.5. So we wonder, are we going to come all the way back down here to 17.5? We might if the market continues to rally. But remember, when we spiked up here on Monday, we had gotten a little separation from the 10-day moving average, and all those rules work no matter what chart you're looking at, what security it is, even the VIX. I would argue that Elliott wave rules apply. So we'll see. We could come down, and I think at this moment we already have tested the 10-day moving average on the VIX, and then we'll see if we move back down towards 70.5. So right now we're at 2084. So we haven't quite gotten back to the 10-day moving average yet, but we're getting awfully close. So we're about right there on the VIX at this moment. So that's the bond market. Let's take a quick look at the metals because gold is just won't go away. I talked about this on both the HUBB Live Show and Trade Finder, that we have that potential move up to 100% C-wave extension. Gold just is powering higher, which makes you wonder why. On the bond market, with prices going up, you could say that money was going there to hide, but money's coming out of the bond market today. Is it going into the equities market? We'll see where volumes are at the end of the day, and we'll have the volume at the end of the day tomorrow to talk about during the insiders meeting as well. Silver is at least trying to make a bit of a rebound. It's holding this 10-day moving average, which is key, and perhaps silver has another big update like it did last week here on Friday, where we can or Thursday and Friday, where we can start to play some catch up with SLV because it's just simply been lagging. And perhaps that's due to silver's connection to technology. A lot of people have asked about that, both from the U.S. market update over the weekend, et cetera. Why is silver lagging? The only thing I can come up with is because it does have that tie-in and connotation with the technology sector, and we all know the Qs have been pretty much decimated here. I mentioned yesterday during Trade Finder that there has been some nibbling in this area, and we're getting some follow-through on that today. So people kind of came in at Monday's low, but they did on everything, and you could argue that, well, the Qs didn't have as good of a Monday as the other markets did, but now it's trying to play catch-up. And it does look like we're coming back to the point of this triangle. So we had this ascending triangle. We had a false breakout. Big move was to the downside. We're likely going to at least come back to the point of the triangle, and then we'll see where the Qs go from there. That will be interesting to see. Update you real quick on Bitcoin because it's also moving today. All the cryptos are trying to avoid a downside breakout out of its own ascending triangle. Remember, an ascending triangle does not guarantee an upside breakout, but it looks like perhaps this breakout was false as well, and we're moving up. And I know crypto people, Zach included, big crypto guy, says that there's no real exact tie-in between cryptos and the equities market, but I think Zach would agree that if you have a major risk-on, risk-off environment in the equities market, that does apply into cryptos. So there would be a tie-in from that standpoint, but in the general analysis between equities and cryptos, it doesn't really matter. They're the kind of their own vehicle, but if the market is in a staunch risk-off environment, it's hard at that point in time to imagine a rally in cryptos. I haven't seen it recently, so I feel like that's a pretty good representation there of how crypto handles things. But we're back up to 87 here, which is key. We were in danger with this potential downward breakout of moving down to 75,000, but buyers have stepped in clearly. But once again, we're just at the point of this triangle. So we still could have a downward move here until we take out these highs. Right now, it could just be, okay, we broke out, we're going to test the breakout, then we go. That's one of the ways that triangles break out. Or this could be a false breakout just to shake out some weak hands, and then off we go to the upside, and we disqualify this 5-wave pattern. But until we take out this wave 4, you still have to be cautious in crypto space, especially on Bitcoin. It's a nice day today, but we're still under the 50-day moving average. And if we break that, we still have to take out this wave 4 high to move this. And again, the wave 4 could go all the way up to 61.8 and still have a downward zigzag in place. So before you can feel really comfortable about Bitcoin and the cryptos, more work to do there as well. So once again, so far today, a good day for the longs, and we'll see if this continues into the close today, and more specifically now tomorrow, since tomorrow will be the first trading day after all these tariffs are announced. And if you want to believe the financial networks, which I take them with a grain of salt, but from the commentary they've been giving, the administration is still working on exactly what the tariffs are going to be. I don't know if I would buy into that. It seems like by now the administration knows where the tariffs are going to be and what they're going to be. Maybe there's still some last minute work being placed on it, but I have a little skepticism on that report. I would think that they're pretty clear on what they're going to do. And then we have to find out the news that goes along with it, right? Are these permanent tariffs, as President Trump has alluded that they're going to be? Or as some reports have been, especially this morning, that there's room for negotiation on the tariffs if other countries lower the U.S. tariffs. Remember, that's the whole reason for these tariffs, is because other countries have tariffs on our goods, and it's been an uneven trade practice, and President Trump and the administration are trying to level the playing field, and so we can either raise tariffs to match theirs, or they can lower theirs, and perhaps we raise a little bit and meet somewhere in the middle. That seems like a great scenario for the markets if that's the news that comes out. But if it's all real negative rhetoric on the tariffs at 4 o'clock, I think we'll see the futures to the downside tonight and perhaps into the open tomorrow. But if there is some conversation about the room for negotiation and they're not permanent, President Trump's a negotiator, so it feels like he would leave room for that, which could be considered bullish. But we're just going to have to wait and see. So we not only want to see what the tariffs are going to be, but the commentary behind them. How fixed are they? Is there a time frame? Is there room for negotiation? All that kind of stuff is going to be answered, hopefully, at that press conference at 4 o'clock. So we'll wait and see. All right, let's move to the AI. We take a look on the bullish chart. You can see there is a score on Cigna of 70, and that one's really interesting to me due to the fact that, one, it's in the healthcare field. It's only a 70 score, so we have done 70 in the past, even though 75 is the target that we like. That's why it's in gray and not green. But healthcare, when the economy is weakening, is a sector that acts as a defensive sector. The viewpoint, we've talked about this in the past, that when the economy weakens, the market weakens, the sin stocks tend to do well, and those are alcohol, tobacco, and gambling. Those are our vices as humans, and the viewpoint is that no matter what's going on, we're going to figure out how to find money for our vices. But healthcare is also a place which, following the election, had a big drop, got a bit oversold, and it's moving back to the upside. So I find that really interesting. So let's go ahead and take a look at the options here that are available on Cigna. You can see we got above the 10-day moving average and we went sideways. I changed these, as you know, from volume to delta. So I like to know where the open interest is, but I also want to know where the deltas are. Unfortunately, on the April, those are weeklies. Let's go to the April monthly. The April 17th contract here has a little bit more open interest in it. So if we were looking over here on the call side, the most open interest is there on the 330 strike, but that's at the money. We try to avoid those, especially with an elevated VIX at all costs. We can come down here, and this one becomes very interesting to me at 340. The spread is tight enough. It's right at our 10% rule. We don't want the spread between the bid and ask to be more than 10% of, if you're buying the ask price, if you're selling the bid price. So if we buy at 340, we don't want the spread to be more than 34 cents. So that's how that 10% works. And it's a 30-cent spread, so it stays within our 10% rule. And there's good open interest there. And the delta is ideal at 31. So that's something that we're going to look very hard at. You may very well see that come out as an alert. We may wait till tomorrow on this. It's a little bit overbought, and we could get, pardon me, some volatility tomorrow. So I don't know if we want to step in front of that 4 p.m. announcement. So we may very well wait till tomorrow, as I said, on this. But the key here is we're also at a little point of resistance, which gives us some time. We're kind of struggling here with this level that acted as some congestion here back in the beginning of December, tested it early in March, and we're right back here. And so we kind of bumped our head there, but we were overbought, which hence the sideways. So perhaps we can see what happens at 4 p.m. and look for that in tomorrow's trade. But a pretty interesting one there. Let's add in the DMI. And if you look at that, you may be wondering, if you're familiar with the rules on the DMI, is this a bad thing that the positive directional indicator is below the ADX? It's not ideal. There's still some separation between the two directional indicators, but there's some uncertainty here. I don't mind it when the positive directional indicator is ticking down, but what I don't like to see is the positive directional indicator ticking down and the negative ticking up, because that means that there's some sellers that are feeling a little more comfortable as the buyers weaken. Sometimes you get a surge of buying and the buyers just step away for a bit, or we wait for the next ones, but you don't see a tick up in the negative directional indicator as the sellers just are staying away. So that little tick up there is slightly concerning. So once again, we'll want to see where things close today. The fact that the ADX is staying sideways like this means continued strength. So what that means with the chart is that this area here, although it's not all that significant from a price standpoint of the movement, the stock itself is staying pretty strong, which is why you haven't seen much of a dip here on top of what the market has been doing. So the ADX staying up here is good. If we do get a renewed move to the upside, that positive directional indicator will turn up immediately and could get back above the ADX. The more ideal scenario is when the positive directional indicator is above the ADX. But the fact that the ADX is staying strong and a slight drift to the upside gives you confidence that there's strength in the pattern. And maybe I'm being a little too picky on waiting till tomorrow. Monday morning quarterbacking is easy to do. If we have a big open tomorrow to the upside, then you can say, oh gosh, we should have put that out today. But I just think there's too much uncertainty on what we're going to hear at 4 p.m. And if everything is down in the morning, we might be able to get a slightly better entry here as we test the 10-day moving average. So that would be quite interesting. Looking at the lower end on the bullish side, remember you can fade the scores below 25. This is Home Street. Not really familiar with this company. So we'll take a look at the options. It's a lower dollar stock, so we may not have much to choose from in the options, but you can see we gapped up and took off. I don't know if this was earnings or what. I'd have to do some research there. But we are way overbought, and you can see it's not participating in the rally today, basically trading exactly where we closed yesterday. Let's look at the options here. And by the way, the options functionality you're going to see really soon. So we're all very excited about that. And unfortunately, when we look here, this is what I was afraid of on the options. Very low open interest and not much in the way of deltas either. So on this one, since it's a low score, we'd be over here on the put side. And once again, not a whole lot of open interest. We do have 95 contracts, which is kind of borderline here on the 11 strike for the April contract, but the spread's 30 cents wide. It's way too wide. My guess is that it's not going to get any better in May, but let's take a look. Stand corrected here. The 12 strike here is a tighter spread. It's 20 cents wide. We would like it to be more like 8 cents wide on this, buying this. So the spread's a tiny bit wide, but certainly a lot better than what we looked at on the April contract. And there are 300 contracts here. So somebody put a position here. Whether or not that was buying or selling of puts, we don't know. But there is some open interest there, 45 delta, not too bad. The 28 delta is way too wide. Let's just try one more. Let's go to August and see anything there. And yeah, nothing. It would have to be a May position here and that 12 strike. Perhaps you could get in at 75 cents, which would be better. With this 45 delta and the 300 contracts, that might work. And you could make an argument that, well, if you're worried about what's said at 4 p.m. And whether or not that could create whatever movement could happen, we don't know. I mean, the futures could explode higher too, based on what they say. Again, I'm more concerned or interested, I guess, on what they say than what the actual tariff amounts are going to be. So this one looks really interesting as a potential to the downside. So I'll do some further checks on this. This could be one that could come out by the end of the day. You can see that we've got a really extreme high point on the CCI, and it's coming back down. So that implies that maybe some strength is really waning in this move. That's a really high point there on the CCI, as it should work its way back down at least to positive 100. That's why there's the 100 and negative 100 on the CCI. If you haven't looked at the education on our confirming indicators on the website, I invite you to go there and do it at ewotrader.com. We talk about this range between the 0 point, positive 100, and negative 100. And when we get outside those ranges, that's when we get the extreme points that we look for, whether it's an extreme point to the high or the low. And that's why anything, which I think is really cool, the way the software uses this indicator, is it shadows the areas either above 100 or below minus 100. So it lets you know, hey, we're getting a bit oversold here. If it's below the negative 100, we're getting a bit overbought. If it's above the positive 100, when you're between 100 and negative 100, you're just said to be kind of in the normal range of the CCI. So where the CCI is helpful is when we get these outliers above 100 or below negative 100. So that one looks quite interesting to me on the put side of things on the bullish search. If we go to the bearish search, nothing really to look at. You can see VSH is only a 59 score. We wouldn't want to do anything with that. And we have this extreme low on the CCI, building back up. So perhaps that applies in with that lower score on the AI. So we wouldn't want to do anything with this, even though I've traded Vishay Intertechnology in the past, but nothing that we would want to do with that score. It's not high enough. It's not low enough. And then we go down to the bottom end to look to see, is there anything to fade with a score below 25? And there's not there either. The SPHY is the high yield bond on the spiders. And pretty interesting place to be, I would think. But this downward zigzag pattern might be close to playing out. We'll see. Gosh, that's a pretty darn good zigzag. I think the AI target's right there at 23.14, and the zigzag gets us just a hair below that, not much. So call them in concert there on the potential low. But as you can see right now, we wouldn't want to fade that anyway because we're already too far oversold. We're going to have a little bit of volatility in the mix. You could argue that, well, why wouldn't you want to fade that? Because if it's oversold, you're going to go back up here. But this oversold condition is going to create volatility, which would bring in a spread as a pretty good scenario. You've seen how the spread has been helping us on Allstate, which we'll probably adjust here in the next couple of days in the spread that we have there in the AI portfolio. So interesting there. Would want to see if there's a spread available. And I'm just going through the motions. We're not going to do this because the score is too high. If this was below 25, if it was say 19.13 instead of 39.13, we would be going through all of the pieces that we're doing now. And so you'd want to look at a call spread. So you'd be over here and nothing to do. No open interest. Just you definitely don't want to put a spread on there, even though people say, well, market makers like spreads better because it immediately hedges off their risk. That is true. But when you have wide spreads, the negative of putting on a spread is there's so much slippage between putting on two options, a buy and a sell instead of just one. So nothing to do there. Let's move over to the sideways, see what's going on there. And gosh, if we look at VSAT, once again, it's easy to under Monday morning quarterback. Been experimenting with fading these lower signals, and on the sideways, if you have a low signal, that means it's likely to move outside of one of the boundaries. And we really timed this pretty darn well, where we had this big move up, took off the calls, let it come back down, took off the puts, but then we've gone lower, and you're like, gosh, we just would have waited a little bit longer. We could have really had a nice profit there, but you don't know that. And when you're managing a position, the first goal is to recover the loss. If you can end up with a gain, great. But the number one motivation on making an adjustment to a position is to recover a loss in a position that's gone the wrong way. So easy to go back and second guess, but it does show you the potential of fading these low signals. It's the message that I've been talking to you about for the last few weeks. You know that even though we haven't been getting too many high scores on the bullish and bearish signals, fading the low scores is an alternative, and it works in the sideways as well for putting on a strangle. So, I mean, we've had marginal success with that so far. So we have two low scores here on the sideways. The problem is they're both in the therapeutics industry, which are highly volatile. And that means expensive options, not the ideal scenario for a strangle. When you start off by paying extra volatility, you're rooting for it to go down. And maybe it would go down, but if it goes to the upside and we don't have these big spikes like this, the volatility will come out, and we're fighting that. We're fighting the loss of IV on the movement between the two deltas on a strangle. So the therapeutics in general, some of you that have been around with us for a while know that we've come up with the monitor, don't do drugs. One of our subscribers came up with that because the worst position I think we've ever had at Evo Trader was a therapeutic stock, drug company stock. So tend to stay away from those. But if you can put on a strangle, that's the opposite side. You want the volatility then, but we would need it to be volatility to come back down. Let's just quickly take a look at the options and see what they look like here. We'll go to, since we're doing a strangle, we definitely wouldn't want to do April. We want to do May or June. I'll look at June first, and then Allie. 40 delta has 29 contracts. Don't have an alternative delta here, but it's really expensive. See, this is the problem that I was talking about. Look how expensive putting a strangle on this company would be. That's the issue. So we can go up and look at May, probably be a little less expensive, a lot better open interest on the May contract. But just buying the call at a 32 delta, it's going to cost you $4. So then if we go over here and try to find the corresponding negative delta, it's another $4. It's an $8 strangle. So there you have the challenges with these therapeutic stocks. They have volatility built into them because I'm not the only one that knows they move like crazy. And if you get on the wrong side of the move, it can be problematic. So the extra volatility is enticing from a strangle standpoint, but you got to find that middle ground. You got to find where's the potential volatility in the stock without the added volatility put in the options, which we don't have here. Even with 32 contracts and going down to a 26 delta here, it would be too expensive. And if we came over here and went to the 25 delta on the 105 strike for May, 89 contracts, but you're still paying probably $3 it would cost you to get in there and maybe get in here, maybe at 430, 435. So it's still a $7 strangle, which is too expensive. Yeah, that's it. It kind of furthers my point on what happens with these therapeutic stocks. So I am really intrigued by seeing these low score potentials for strangles on the sideways after drop. It just so happens that today both of them are therapeutic stocks, which we don't want to do. So let's move back and we'll go back to Monday's chart. Here's GYRE, but look what it is. So if you wonder, well, why didn't that one come out? There you go, because it's another therapeutic stock. So we're dealing with all those on the potential ones to put the strangle on. And at a $7 stock, I didn't even bother looking at the options here because with the strike price being this low, even if the options are good, way too hard. And, that's not going to help if there's no options. Can't do anything with it anyway. So then we have IIPR, which is right above the borderline. Innovative Industrial Properties, another company I'm not familiar with. But you can see this one is moving from after the drop, which is what the lower score on sideways after drop would imply. So if we look at the options potential here, once again, we wouldn't want to do April, maybe May or June. A little more interesting here. We have a 37 delta at $1.90 and then a negative 39 delta. This is pretty interesting through here. Been kind of waiting to see if this would actually happen. After the big drop, that's when the volatility is the highest, but we had a doji there, and this is ideal. This little creep higher here is what you want to see for volatility to come out, which then makes it, and you can see the difference. I mean, it's still a $56 stock. It's not that much different than the therapeutics were, but you can see what I'm talking about with the IV that's in the therapeutic companies so high. The cost on this would be doable. We could, even if we pay, forget splitting the spread, if we paid $1.90 and $2.45, that still gets us in where we want to be. So that's intriguing. And then let's just kind of tiptoe out to June to see if it costs us too much to add a little extra time here. And not a whole lot. The problem is we lose the open interest unless we go way out of the money, which I find so interesting. They just can remember the days when it was so opposite from here, and maybe we've had an effect on that. I've been preaching the delta gamma relationship on out of the money options for 10 years now or so, and maybe people are figuring it out. That's where the action is, rather than just going to at the money options or the higher delta in the money options. So the issue here is June is doable, but it's a 20-cent wide spread there. It's a 15-cent wide spread here, and that's just a little too much slippage to give away. So we would be looking at the May contract, which doesn't give us much time. So this would need to move rather quickly, but I'll do some more work on this as well. I wanted to show you that one because I feel like that one's also interesting. And if the VIX continues to drop throughout the day, which it has turned and ticked up, so looks like maybe we're starting into the wave 4. I'm going to go ahead and bring the live chart back up. And Zach, if there's any questions, I'll take those now. I know you guys got to get going for your next show, and we're right at time. So any questions real quick? Happy to take those. If not, then we'll get back to our trading day.
Yeah, absolutely. Excuse me. Thanks, Rob. We do have a number of questions per usual, but as you mentioned, we do have to get ready for Jeff's HUBB Live starting at 2. So I'll pass through a couple symbols, and if anyone has any questions that are time sensitive, please feel free to write them into support, and I'll ensure that Rob can address them there. Question from Leonard on Amazon.
Yeah, we'll take a look. I did want to show you, here's the intraday chart. We talked about this, that there was the sideways move. We did go a little higher, and now we're creating the wave 4 right to the 50-day moving average. So this is why I show you this stuff. For those of you that are trading on a shorter term basis, utilize these tools and follow these rules if you're doing that. Again, we don't encourage day trading or intraday trading, but I know people do it and just want to help create as much discipline as I can. Let's look at Amazon real quick. I'm sorry that I rambled on a little long and didn't leave as much time for questions as we'd have liked, but I felt like everything that I said was informative and needed to be talked about. Trying to anticipate questions that would be coming up in people's minds. The key here on Amazon, as we've talked about, we got to get back above 200. So holding this 195 level is helpful. And at the moment, we're back above the 10-day moving average. But I think you need to see Amazon get back above 200. And if it's going to get back above 200, you might as well wait and see if it can get above 205, because that's where the 50-day moving average is. We do have just barely qualified 5-wave pattern still. I mean, we're at the last bastion of fib support here, 78.6 on the wave 4. But I think just a little more patience is warranted here. Let's watch it. If we can get above 200, that's good, but we really need to be back above that 200-day moving average. And if we can, look at this movement to the downside in the wave 3, we could be off and running to the upside here in some clean air, and you could really get a rally in Amazon. It's definitely a stock to look at if the market is not going to complete the zigzag to the downside if we're done, but I wouldn't step in just yet.
Thanks, Rob. We'll wrap up with this last conceptual question from Maria. When you day trade, do you buy stocks or options?
Options. Yeah, I don't do stocks anymore. If a stock doesn't have options, I don't even mess with it. Like today, you've probably all seen what's been going on with Newsmax. The meme guys got in there. I don't have enough time to go into detail until they did it was an odd way that they structured their IPO. It wasn't traditional, and it allowed a little bit of squeeze mentality because of the compressed float, etc. And on Newsmax, the stock took off, and it just got out of control. The stock opened at $10 a share, and then if you've seen the chart on it, look at that. So here's where it opened at $10, and it immediately jumped up to 260. You want to short the heck out of that. Doesn't even have a 10-day moving average on it yet, but there's no options on it, so you'd have to short the stock, and I'm not going to do that, even though this was probably as easy a trade as you could ever ask for on getting it to come back down. But shorting stock's the riskiest thing you can do. It requires a ton of margin, and even though I just really felt that I was on the right side of that, that just wasn't a choice. So answer your question, Maria, I only do options. And I know that I rambled on and we're out of time. So I would like to encourage anyone that had a question that didn't get answered, please send it into support, and it'll get forwarded to me, and I'll get back to you as soon as I can. So I do apologize for the limited Q&A. But once again, I thought it was a day that we needed to discuss a lot of things. And next week, I will be more brief because all the fun will be, of Liberation Day will be done. Hopefully the markets will settle down, and I'll allot an additional time for Q&A next week. So once again, if you have a question, apologize for not getting to them all. Send it in. I'll answer them that way. And with that, Zach, I'm going to wrap up. Thanks for all your work behind the scenes. I know people have no idea how much you have to do now with the new Zoom platform in managing things. And thanks everybody for spending some of your time with us. I hope you like this new time slot as much as we do. And hopefully you'll all be joining us for the Insiders tomorrow night, because boy, we'll have a lot to talk about then. Have a great afternoon. Look forward to talking again soon. Take care, everybody.